And here are the crypto top headlines. First up, BlackRock's spot ETH ETF, bridging traditional finance and cryptocurrency. Next, expert explains how Judge Torres unintentionally gave XRP community a weapon against Bitcoin maxis. Also, investor confidence in digital assets soars as ETP inflows surpass $1 billion in 2023. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, BlackRock's spot ETH ETF, bridging traditional finance and cryptocurrency. Explore BlackRock's groundbreaking move to file a spot Ether ETF, blending traditional finance and cryptocurrency investment and its impact on the market. Embracing digital assets in mainstream investment portfolios. Introduction. A milestone in crypto investment. The financial world is abuzz with BlackRock's recent filing to launch a spot ETH ETF. As the largest asset manager globally, BlackRock's entry into the cryptocurrency ETF market marks a pivotal moment, blending the realms of traditional finance and digital assets. The surge in ETH's price. Upon the announcement, Ethereum's price witnessed a significant spike, jumping 10% and reaching its highest level since April at over $2,000. This price movement underscores the impact of BlackRock's involvement in the cryptocurrency space, signaling strong market anticipation for the proposed ETF. BlackRock's strategic move. BlackRock has filed the iShares Ethereum ETF with the Delaware Registry. The strategic step follows their earlier filing for a spot Bitcoin ETF. BlackRock's deepening commitment to cryptocurrencies, especially in seeking to list a Bitcoin ETF, has been a game changer, indicating a broader acceptance of crypto by average investors. Competing in the crypto ETF space. BlackRock's move into Ether ETFs is not without competition. Firms like ARK 21 Shares and VanEck have also filed applications with the SEC for spot Ether ETFs. Grayscale Investments is converting its Ethereum trust into a spot Ether fund, showcasing the increasing interest in this area. The SEC is yet to make a decision on these applications, highlighting the cautious approach regulatory bodies are taking towards cryptocurrency ETFs. A new era for investors. The introduction of Ether ETFs opens a new avenue for investors, especially those accustomed to traditional investment vehicles. With Ethereum's unique use cases, such as smart contracts and decentralized applications, an ETF provides a more accessible way for investors to gain exposure to this burgeoning asset class. Regulatory hurdles and market dynamics. The U.S. Securities and Exchange Commission has historically been hesitant to approve spot cryptocurrency ETFs, citing concerns about market manipulation and fraud. However, the landscape may be changing. The SEC's ongoing discussions about a spot Bitcoin ETF could pave the way for similar products like Ether ETFs, suggesting a potential shift in regulatory stance in the near future. BlackRock's influence on the market. BlackRock's involvement in the cryptocurrency ETF market could be a major catalyst for bringing crypto assets to traditional finance investors. Their established reputation on Wall Street and innovative approach in financial products have the potential to bridge the gap between the cryptocurrency world and mainstream financial markets. Conclusion. The future of cryptocurrency investment. BlackRock's decision to file for a spot Ether ETF is more than just a new investment product. It represents a significant step towards integrating cryptocurrency into the fabric of traditional financial markets. As we witness the evolution of investment vehicles and the increasing acceptance of digital assets, it's clear that the financial landscape is undergoing a profound transformation. Our next top headline: Expert explains how Judge Torres unintentionally gave XRP community a weapon against Bitcoin maxis. Attorney Bill Morgan says Judge Annalisa Torres inadvertently gave the XRP community a weapon against Bitcoin maxis by analyzing the coin under the framework of Howey. Australian-based legal expert Bill Morgan has explained how Judge Annalisa Torres, the judge overseeing the SEC versus Ripple lawsuit, unintentionally gave the XRP community a weapon against Bitcoin maxis and other critics. Bitcoin maxi highlights flaw in SEC versus Ripple ruling. For context, Judge Torres' ruling in the Ripple case became a topic of discussion over the weekend. In a recent tweet, a Bitcoin maxi named Scam Daddy stated that Judge Torres did not clarify what category of asset XRP falls under. In July, the judge declared that XRP in itself is not a security, as alleged by the SEC. Consequently, Scam Daddy said the judge only declared that XRP is not a security, but failed to mention whether the asset is a commodity or currency. Judge Torres treated XRP as a commodity. Reacting, Attorney Morgan posited that the judge treated XRP as a commodity in the landmark ruling. However, the Bitcoin maxi refuted Morgan's claim while sharing an excerpt from the decision, indicating that the judge did not view XRP as a commodity. Meanwhile, Attorney Morgan pointed out that the excerpt was part of the judge's efforts to explain why she found Ripple's institutional sales to be an investment contract. The lawyer pointed to a section of the summary judgment where Judge Torres expressed her view of XRP within the framework of Howey. According to the lawyer, Judge Torres, on pages 14 and 15 of the summary judgment, differentiated the contract, transaction, or scheme from the underlying asset. Notably, the judge emphasized that the underlying token is not necessarily a security, even though it is part of a transaction that constitutes an investment contract. The judge listed various assets, including Gram, as standalone assets that are not inherently securities. She later concludes her analysis by stating that XRP, as a digital token, like Gram, is not itself an investment contract, even though it may be the subject of an investment contract like any other standalone commodities, Attorney Morgan said. Judge gave XRP community a weapon against Bitcoin maxis. The lawyer said the Ripple ruling would still be logically correct if the judge did not provide a legal analysis for XRP. However, he speculated that the judge gave the analysis due to the SEC's refusal to clarify the security status of the token itself. The attorney said Judge Torres unintentionally gave XRP community members a weapon against Bitcoin maxis, including Scam Daddy, who claimed that everything other than BTC is a security. Additionally, Attorney Morgan pointed out that the analysis could be used as an argument against critics who stir confusion about the judge's classification of XRP. Our next top headline: Investor confidence in digital assets soars as ETP inflows surpass $1 billion in 2023. Investor confidence in digital asset ETPs strengthens with record inflows surpassing $1 billion and heightened market anticipation. The latest CoinShares report for November 13th reveals a sustained influx of capital into digital asset ETPs, marking a significant milestone in the current fiscal year. Last week's inflows amounted to $293 million, contributing to a year-to-date total that surpasses $1 billion, an indicator of burgeoning interest from investors. This surge in ETP inflows has propelled the year-to-date figures to $1.14 billion, positioning 2023 as the year with the third highest annual inflows on record. Notably, Bitcoin ETPs have become particularly prominent in the trading landscape, accounting for 19.5% of total Bitcoin trading volumes on trusted exchanges. This percentage is not only exceptional, but also signifies that ETP investors are engaging with the market with greater vigor than seen during the start of the Bitcoin bull run in 2020. Such engagement levels suggest a matured market participation and a shift in investor sentiment towards these products. The positive sentiment is further exemplified by Bitcoin's robust inflows of $240 million in the last week, escalating the year-to-date inflows to an impressive $1.08 billion. Concurrently, short Bitcoin positions experienced outflows, reinforcing the prevailing positive market outlook. Ethereum's performance has also been noteworthy, with the largest weekly inflow since August 2022, reaching $49 million, reflecting a renewed investor enthusiasm, potentially spurred by developments such as the recent spot-based ETF listing request in the United States. The inflows by provider show a diverse participation, with entities like 21 Shares AG, ProShares ETFs/USA, and Purpose Investments Inc. ETF leading the weekly inflow charts. Moreover, the distribution of inflows across countries indicates a global uptake, with notable contributions from Canada, Germany, and Switzerland, despite a slight retreat in markets like Brazil. Weekly crypto asset flows from CoinShares. CoinShares' year-to-date weekly inflow/outflow chart showcases an increase in inflows over the year, lending credence to the sustained investor interest and market resilience, even amid geopolitical and economic uncertainties. Even ahead of any spot Bitcoin ETF launch in the U.S., the global digital asset ETP landscape is experiencing unprecedented growth, with recent data highlighting robust inflows and active participation that underscores investor confidence. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.